Hey YouTube, what's going on? Chris here. Wanted to bring you guys a little tutorial. Remember how I said I was going to try to sneak these in if we just had a little bit slower time in the market? And I think now is a good time because, especially with like Ethereum and some of these other charts, we may potentially be forming an ascending triangle, and you kind of want to know what to do with it. So that's why I'm going to bring this to you all today. If you guys could like, subscribe, hit that notification bell. We're trying for 100 likes on these tutorials. If you guys really enjoy these, I'm going to keep them up the best that I can. And I think these are just something that's really important, these patterns, to have in your toolbox. Remember, patterns, guys, they can break. These patterns can break to the upside, they can break to the downside, you can continue to move sideways. These are just projections of what happens with these patterns most of the time. So that's what we're going to get into. And what we're looking at here is an ascending triangle. And with an ascending triangle, you're going to have higher lows that are taking place, and you're going to have this flat top where we've been seeing rejection. So here you got pushed up, and then we saw rejection. We came back down, went back up. We had a double top here, got rejected again, came back down, but we set a higher low. See how the lows are getting higher. We didn't make it back up here, came back down, but still set a higher low, came back up, and we broke through the top of this. And what you'll see a lot of times is we'll come up out of the top here, then we'll come back and test the top here, which is now support. So that's resistance turn support, and then you'll continue to run. You'll have that. Sometimes you'll just break and continue to run. Other times you'll break up here and then fall all the way back down through. And those are the scenarios that you have to be aware of. And then it says, the ascending triangle pattern is similar to the symmetrical triangle, except for the fact that the upper line is a horizontal resistance line. Ascending triangles are generally bullish in nature and are most reliable when they appear as a continuation pattern in an uptrend. In these patterns, buyers slightly outnumber sellers. The market becomes overbought and prices start to drop. However, buyers then re-enter the market and prices are driven back up to the recent high, where selling occurs once more. Buyers re-enter the market, but at a higher level than before. The result is a steady high at more or less than the same level, but series of higher lows. Prices eventually break through the resistance level where the high peaks were formed and are propelled even higher as new buying comes in, volume increases. So from my book, The Getting Started in Chart Patterns by Thomas Bulkowski, it says for ascending triangle, these are the things you want to look for. Look for peaks that top out near the same price. So that's what we're seeing here. Find prices that make higher valleys. Prices should touch an upsloping line drawn beneath the valleys. So yet again, we're having this. So here's your trend line, and here's the valleys they're talking about, those higher lows. So far 2 for 2. Prices must touch each trend line at least twice. So we have that, boom. The two trend lines converge at the triangle apex. So right here, we have that. Volume trends downward 77% of the time from the pattern start to the day before the breakout. We don't have volume in this chart. A breakout occurs when the price closes outside the trend line boundary. An upward breakout occurs 70% of the time. In this pattern, you'll get this 70% of the time it'll break to the upside. Other 30% of the time it'll break down. Then last one, prices must cross the chart pattern from side to side, leaving little white space within the body of the pattern. So you don't want this to be up here, then we have this, and then it's, a huge white gap in between here. That's what you don't want to see. You want this filled up. Do you see how that's filled up in there? Not a lot of white space. You have a little bit here, but that's still not too bad. So you really want this to be working in terms of the price action in there. And then, like I said, you'll have that breakout a lot of the time. 70% to the upside, 30% to the downside. Now, in terms of price projection with these, it says entry signal. An entry signal is given when the price breaks out of an ascending triangle to the upside. This should occur about 66% into the triangle. If the price breakout occurs near the apex of the triangle, it's not a valid entry signal, as these breakouts tend to lack momentum and have higher tendency to fail. So you want to keep that in mind. And then also the last little bit, price projection. A price projection of an ascending triangle can be calculated by taking the widest part of the triangle and adding it to the breakout point. Alternatively, a trend line can be drawn parallel to the resistance trend line, which slopes in the direction of the breakout, with the extension being the price target for the move. So what they're talking about when we have this here, this butt of the triangle right here is what you would project to the upside, how far that could make it. So these are some of the things I wanted to bring to you. Really study the ascending triangle yourself, guys, and let me know down low if you've used this before. And also, like we talked about with Ethereum, and that this is something that could be forming, so keep your eye on it in terms of the crypto space. God bless each and every one of you.